Welcome back to the Halftime Report. Let's hit our calls of the day. First up is KeyCorp. The regional bank shares have rallied 13% year to date, but BMO Research is stepping to the sidelines. The analyst downgrading KeyCorp to a market perform and trimming her price target to $17 a share. This is a group that has been on fire. It's up about 11%, 11+% so far this year alone. So in financials, Josh, what do you like?
Well, I own the big ones. I own JP Morgan, and then I'm in the brokerage / wealth management space in Schwab. So I think I want capital markets exposure. I think that's one of the stronger parts of banking right now. The loan growth is just not exciting for anyone. But then if you do want to find individual stories that have good loan growth or were overly punished for what the street thought was going to be bad loan growth, one name I would point out that's having a huge day right now is OZK. This is the old Bank of the Ozarks. They shocked the street late last year with massive losses, but it was primarily from a handful of projects. Then they had a good fourth quarter, and then today, beat by 6 cents. Stock got right back up into that old gap. And this is a name where, maybe the street got way too pessimistic about. And I think those stories exist all over the country, different pockets. So you almost have to look at them like drug companies, and they have individual stories. They're not all trading in a block right now.
Yeah, I think with the regionals, you have to have a strategy. You have to have a process. I think there's three names I would mention. First Republic. Excellent follow-through to the earnings report. I like that for a regional bank. Second thing, you've got the price of energy rallying. I go back to the Texas banks, Texas Capital, TCBI. You get the exposure of the financials recovering combined with energy recovering. That's a name I look at. And lastly, technology, the sciences. You go out to Silicon.
Seems like a double levered bet in that you're exposed to interest rate risk as well as oil risk. And those are two sort of unknowns in the market right now.
Well, you're playing the rebound, though,
if you believe the rebound is.
Yeah, and I do.
Right.
I'm confident in that rebound, so I believe that. And then the last thing, Carrie Fineman mentioned it the other day. I gave it as my final trade yesterday. It's SIVB. That's the Silicon Valley Bank. Carrie Firestone, sorry. Silicon Valley Bank, that's the holding corp for the commercial bank. And you're doing lending to the emerging growth, the mid-cap, technology and sciences in one of the hottest property markets, one of the hottest regions in this country.
I added a lot to B of A this morning.
A lot.
I bought. I mean,
double your position?
I doubled the position.
Okay.
Stock was down a little. Didn't think it should, but like you pointed out earlier, I'm watching the 10-year. And as China news happens, these are pure proxies for rates.
That's a great point.
So,
we like the large banks as well over the regional plays, in part because of the less dependency on the spread between loans and deposits. In other words, the shape of the yield curve. You also have to realize that banks in general have a very high percent of tech that they need to, IT spending that needs to go into their business. And so we feel more comfortable with the larger banks being able to put that capital into protecting data and customer privacy.
But I would caution you when you have Maxine Waters and all these others.
And Alexandria.
It's a good point.
Exactly.
Yeah.
And I'm not concerned about her. She's,
It's all headline risk.
Right.
This is headline risk.
I do think it's
but
probably more smoke than fire there in terms of what they can actually get done.
Let's move on and talk about energy. Chevron catching an upgrade to a buy at UBS after more than 3 years with a neutral rating on the firm. The analyst calling for nearly 20% upside from here. So, Dr. J, what do you make of this move?
I think it's a great move out of Chevron. I think ittle be short-lived, Mel.
Okay.
Yeah, because I'd much rather be in the oil service space. So I talked about Schlumberger just 4 or 5 days ago here on the show for unusual activity. That stock has exploded to the upside, easily outdoing what Chevron's doing. And I think that'll continue. I think these waivers that are, even if they don't offer more waivers, the waivers they've already given for folks that are buying their crude oil out of Iran, I think those waivers are why we have such an oversupply, and I think the service stocks are better than the ones that own the stuff in the ground.